Hey guys, Adam Rose, Vice President and Senior Loan Officer of Western Ohio Mortgage here in Sydney, Ohio. And today is another episode of the Mortgage Guy podcast, and we are going to learn about USDA renovation loans. And, well, we're going to start a renovation series, and today I wanted to start with USDA, of course. So you've probably seen some past videos of what USDA is. So USDA is backed by the federal government. It is a zero money down program. So just a few little nuances to it, right? They have some income limitations, right? So I think we've talked about this as well. Household of 4 people or less, about 110. Household of 5 people or more, 147. So there's some little odd things about it. It is a rural product in nature, okay? So what that means is we can't buy in larger metropolitan areas. So usually a population of 20,000 or less, you're usually in the green, okay? There's actually a website. Just Google USDA eligibility map, and you should be able to find all the areas of where you might be able to qualify for a USDA program. So just a heads up there, just a quick little broad brushstroke on a reminder of what USDA is. Great loan program, and we're one of the few lenders out there that pair that with a renovation loan at the same time. So on the renovation piece, a lot of people don't like to use it because there's a wrench in there. And that wrench is a contractor, okay? And it's not the disc contractors out there. Some are phenomenal. But some are a little bit slow in response time. Some are very, very busy, can't get out there in time. And we, in our industry, as you all know, we're working off of contract dates. And to meet those contract dates, it can be a little challenging when we add another third party coming into the picture that we need to rely on to help us get us to the closing, or to the finish line in this case. So let's talk about some things that you can and can't do with USDA renovation loan. So main purpose of this program is really designed to bring the property to par, right? A lot of people don't want to do government lending in general because maybe there's some repairs needed and the seller may not want to deal with it. Well, this is a great solution to kind of pull those sellers into accepting more offers with USDA or FHA, you name it, because we have a renovation product pretty much attached to each one of those programs. So we're going to be able to finance stuff in. So let's just give an example. This is the best way to do it. So we find a home, USDA eligible area, $100,000, for example. I don't know. It needs a new roof. Okay, it's going to cost $10,000. Well, seller doesn't want to fix it. They're not doing it prior to closing. It's going to be a sticking point. So people are pushing, maybe trying to do conventional. Even in that case, sometimes if an appraiser notices it, it can still be a problem. Okay, it doesn't mean that you can just get by with it by switching programs. But let's say it's in the best interest of the borrower to go USDA, maybe because they have a lack of funds for down payment, what have you. Well, this is where the USDA renovation loan comes into play, right? A home that will not pass an inspection, a home that's not financeable in general, can now go government lending, no down payment, and move on with your day with repairs. So, I mean, it's crazy. So it needs a roof. All right, step 1, find that contractor. That is huge, okay, guys? This is the biggest challenge that we run into when we do renovation lending. You need to be prepared to speak with contractors prior to possibly even making an offer on the home, just to check around on their schedules, how far out are they, what's going on, and get an idea of how long we need to write this contract for. Well, not we, you and your agent, but how long you need to write that for in order to make sure that we are meeting all the contract expectations, okay? So having a contractor in your back pocket is huge. Some rules on the contractor, okay? Cannot be related to you, all right? So no familial relationship. So Uncle John cannot be doing it for you. Your brother, your dad. Doesn't matter if you own a construction company. You are not allowed to do it, okay? There's no self-help involved. And you can't have a contractor that's related to you, all right? They have to have insurance, all right? Liability insurance at minimum, but they also have to have employee compensation insurance workers' comp insurance, just in case one of their employees gets injured. And it's not going to be on the buyer or the homeowner or anything like that. And that's assuming that they have employees. They may subcontract stuff out. So those are 2 minor things. And then we are going to vet the contractor, okay? So they're going to have like a contractor questionnaire, a profile, a couple of, references they're going to give to us that we can check up on them on their work and stuff like that. Very, very simple stuff, just some paperwork we're going to push around. The big issue that we have here is making sure the bid or the estimate is meeting the requirements for whatever loan program that we're doing. So, a lot of contractors like to be very generic. Okay, so let's say we got this $10,000 roof. They're going to say, dimensional shingles, $10,000. Installed, whatever, clean up, blah, blah, blah. All right? Very simple. All renovation programs, they require that we break out the material and labor cost. Okay, material and labor cost. So it has to be a little bit more defined than that. We would have to go back to the contractor and say, hey, how many squares are you putting on? What kind of dimensional shingles are you putting on? 30-year life, 20-year life, whatever. Describe what you're installing, please. And then we're going to have them break out the material and labor cost. Now, why they do the material and labor cost breakout, which a lot of contractors don't like to do, okay, it's because they don't like to show people what they may be making on the project. So, and I get it, all right, but can't dodge it. And the reason is because we can disperse monies to the contractor to at least order the materials, all right, and we can't do that based off of a $10,000 bid because the material cost may be only $4 on that, and they're charging $6,000 in labor. So that's why they want that material labor cost broken out. Is for disbursement purposes and for transparency, of course. So heads up, if you do talk to a contractor, make sure they're on board with that on how to break out that estimate. They do have insurance, liability insurance specifically, just in case there's an injury or anything like that. And if they have employees, make sure they have workers' comp. So that's the contractor requirements, okay? No fly-by-night stuff. If they need cash up front, they need a bunch of cash, and that's how they just operate. That's kind of a problem. All right, we need a reputable individual or small company to do this. On the renovation piece, what you can do. All right, so find a $100,000 house. We got a $10,000 roof estimate from the contractor, of which we've vetted, of which they've already reached all the requirements for the bid on breaking everything out. Now we're going to finance that into the loan, okay? So now our $100,000 purchase price, our base loan amount is now $110,000, okay? Now, we are going to send that estimate to the appraiser up front as well. And that's another big piece of this, right? Getting the contractor out there to get the bids, get it all done in time. Then we order appraisal. We don't want to be reactive. We want to be more proactive on this. And the reason is because they're going to take that estimate and they're going to act like it's already done. They're going to give you an after improved value. So if they were having issues with comps or whatever, they're looking at the house, it's selling for $100,000. They see the roof's rough. They're going to picture, all right, we know we're going to do a $10,000 roof on this place. It's going to look great. Here are my new comps. I'm going to assume the roof is already done. They're going to give us the after improved value. So it's going to help us on the valuation situation. We're not going to run into any problems there. So that's a big piece of this. All right. So you got to set that expectation. So when you're putting these contracts in or these offers and you're doing a renovation loan, you want to make sure that the seller's aware that you were doing that loan type, and it can take time for us to get those estimates back from a contractor. All right, it could take a week. It could take 3 weeks. That's where you need to set the expectation. That is the curveball or the wrench that is being thrown into this transaction. So anyways, we're financing it in. All right, so we got a $110,000 base loan amount. On USDA renovation loans, there is something called a contingency reserve, and it's almost on across the board on renovation. But we're going to do a 10% contingency reserve on that estimate. So if you get a $10,000 estimate, we're going to do an extra $1,000, okay? That contingency reserve cannot be financed into the loan amount, okay? It's possible you may have to bring that $1,000 to the closing table, all right? Depending on how much value we have, it's very possible you can finance in all your closing costs, you can finance in your estimate, all the way up to the $1,000. It might show $1,000 to close, and then after you get tax prorations and credits, you might still be at zero. But always assume you're going to need to bring the contingency reserve to the closing table. Okay, it's very, very important. Okay, so we got contingency reserves, we got it all financed in, and we're going to talk about disbursement of funds. Okay, this is very generic, by the way, broad brushstroke. Okay, we're going to have Teresa on here. We're probably going to talk about 203K renovation loans, a lot more in depth requirements and what's going to happen during that process. So after we got all this done, appraisal's good, we're going to closing. On USDA renovation loans, we hold the funds here in-house. All right, it's right here in our office. We cut the checks to the contractor. So communication is key, okay? Anytime work is completed and a contractor needs money, we typically have to re-inspect it using the appraiser to go back out to property, take photos of everything that was done, and distribute monies accordingly. Now, like I mentioned, USDA renovation loans are very, very flexible, especially since we hold the money here. So if they need some monies for ordering of the materials, that's why we want to break out that material labor cost, we can give them a check up front, go order the roofing materials, and let's get this project started right away. We don't want to wait a long time, okay? When we say that we're doing a USDA renovation loan, this doesn't mean the contractor can be out there 6 months later, all right? Time is always of the essence, all right? So just remember that when we're doing these. So go to closing, we got all this fun stuff, contractor needs a draw, we re-inspect, we send out the money. That's how this operates, all right? Everybody's happy, borrower's happy, close on your house, you might have already moved in. Realtors are happy, they got paid. Sellers happy, they got paid, they moved on. Now we are here dealing with the end piece of this, with the contractors, getting this stuff done, making sure everything's completed accordingly, and distributing the rest of the money. So that is the big thing here. It's a massive benefit to the buyer because now this buyer can look at properties maybe more in their price point and comfort levels of price point or monthly payment, and being able to bring these properties up to par, right? Because, you know, if you're shopping at a lower price point in this market, there's some rough homes, right? It just is what it is. And so having this program in your back pocket is important. It's huge because it's not just the roof, right? That was just an example. The most common things we run into, roofing, furnace issues, peeling paint might be numero uno, all right? The peeling paint guidelines on all government loans are if your home was built before 78, if there's any peeling paint on the exterior of the homes, sheds, outbuildings, your porch, you name it, all right, the appraiser is probably going to require you to scrape it and repaint it. And that's probably the biggest thing that we run into, and nobody wants to do it. So having this USDA renovation loan in your back pocket is key. That can be the solution to this issue when a seller is pushing back saying, I don't want government lending because it's peeling paint. I'm not doing anything to the home. So just remember that. And it's a huge benefit to the agents and the sellers because now you're able to market it to more potential homeowners, right? A lot more. If you have a specific price point and you're only able to market it to a conventional buyer, you just shrank the amount of buyers that can look at this property by half, easily by half. So always remember this program. It's a great tool, and it's a great way to unload these properties if you're a listing agent. A great way if you're a buyer's agent to help them find a property that's in their price point. Okay, everybody is stretched thin right now. We can't all buy $300,000 homes that are turnkey. All right, some people can only qualify for that 80 to 140 or 80 to 150, whatever it might be, and some of these homes need some work. So don't be afraid to go after these properties using government lending, specifically USDA, because we can finance any repairs that might be necessary. Now, when I say that, remember, we still have to have enough appraised value to do it, all right? So price point is key. Having conversations with your agent about potential appraisals and comps is key. All right, there's a lot of moving pieces of this, but it's still a great solution that can get you into the home that works best for you. So I hope that was helpful, guys. Again, we're going to continue this conversation with the renovation series, and we're going to touch on a little bit more on USDA next week. We're probably going to dive deep into 203K renovation. It might be multiple episodes, so I hope it was helpful. Please tune in and subscribe to our YouTube channel. Check us out on Apple Podcasts and Spotify, and we will see you all next week.